Now speaking, Paul Trussell, Vice President, Investor Relations and Strategic Finance. Nike Incorporated reported its fiscal 2023 fourth quarter results in a quarterly earnings call. President and CEO John Donahoe and CFO Matt Friend discussed the company's performance. Nike reported strong sales growth across all regions with revenue increasing 13% year-over-year to $10.7 billion. The company also reported a gross margin of 45.3%, an increase from 44.2% in the prior year period, due to higher average selling prices and favorable product mix. Operating income increased 28% year-over-year to $1.8 billion, while net income grew 11% to $1.2 billion. The company also highlighted their digital transformation efforts, which have accelerated over the last year and delivered strong double-digit growth in digital sales. Additionally, Nike announced plans to invest in its supply chain infrastructure to drive better inventory management and logistics. Finally, Nike provided guidance for fiscal 2024, forecasting revenue growth of 6 to 8%. Now speaking, John Donahoe, President and Chief Executive Officer. Nike has an unrivaled offering of performance product, and our innovation is second to none. Our groundbreaking React sole still defines modern cushioning, and Vaporweave and Nike Fit technology are setting the new standard for fit and breathability. In this past quarter, we unveiled our latest running innovation, the Zoom X Vista Grind. Its unique look and feel is designed to add energy to the culture around running. It's truly remarkable to think about how far our running business has come over the past 10 years. In 2011, we were a challenger in the market, and today, we're the leader, and our growth speaks for itself. This quarter, running was up 20%, and our global running business grew at a double-digit rate for the fourth consecutive year. We've also seen a significant shift in the dynamics of the running consumer. Today, runners come from diverse backgrounds, and they search for experiences and stories that connect them to the sport. They seek out inspiration and seek out connection points. And they want to be part of something bigger than themselves. This new spirit of running fuels our passion to drive change far beyond product. We're using the power of sport to inspire social change. In addition, we're driving new energy through our running community program, which has more than doubled its membership in the past year. With new members joining every day, the community provides a platform to engage with runners, share knowledge, and create experiences that keep people coming back for more. So, these are just a few of the many ways we're continuing to expand the world of sport. We believe our focus on consumer moments of truth in the marketplace will drive sustainable and profitable growth for Nike. As we look to fiscal 24 and beyond, we will further deepen our leadership across sportswear, basketball, running, and football. We will continue to sharpen our focus on serving consumers with even greater choice, access, and convenience. And last but not least, we will continue to use sport to drive positive change in the world. Nike reported a record-breaking fiscal year in 23, exceeding $50 billion in revenue with 16% growth. This growth was seen globally, particularly in North America, EMEA, APLA, and Greater China, where it returned to double-digit growth in Q4. Nike's brand portfolio of Nike, Jordan, and Converse all saw strong growth, with Jordan achieving a record-setting mid-30s growth. Inventory is flat in value and down in units versus 12 months ago. Digital sales accounted for 26% of total sales, growing 24% year-over-year, and Nike expects digital to continue to lead growth. Nike has invested in creating a distinct digital experience, segmenting consumer experiences to drive direct connections, and expanding choice, access, and convenience with multi-brand partners, authenticators, and accounts. Leadership changes were made to streamline efforts across product, brand storytelling, and marketplace. In terms of sport, Nike has expanded the world of football, with 25% growth, nearly doubling overall Nike growth, driven by women's and kids' businesses, as well as partnerships with the greatest players on the pitch. Basketball saw strong performance with all NBA first-team members from all three of Nike's brands, LeBron's signature shoe marking its 20th year, and the relaunch of Kobe brand in advance of Kobe Day. Running has been a competitive battlefield with more brands joining the market. However, Nike runs the game with React sole defining modern cushioning, and innovations such as Vaporweave and Nike Fit setting the standard for fit and breathability. Through its running community program, Nike is driving new energy and inspiring social change. Now speaking, Matt Friend, Chief Financial Officer. Nike is confident that we will deliver above-average margin improvement in fiscal 24, with many of the drivers continuing into fiscal 25. Nike reported strong financial results for the full year of fiscal 23, with mid-teens revenue growth and mid-single-digit price increases. In fourth quarter, Nike Incorporated revenue grew 5% on a reported basis and 8% on a currency-neutral basis. Nike Direct grew 18%, with 14% growth in Nike Digital and 24% growth in Nike Stores. Wholesale grew 2%. Gross margins declined 140 basis points to 43.6% due to higher product input costs, freight and logistics expenses, elevated markdowns, and unfavorable changes in net foreign currency exchange rates. SG&A grew 8% on a reported basis due to wage-related expenses, variable Nike direct costs, and increased demand creation expenses. Diluted earnings per share was 66 cents. In North America, total retail sales across the marketplace were up double digits versus the prior year. Nike store traffic and revenue grew double digits, surpassing industry trends. Jordan Brand delivered another dominant quarter, and LeBron and Giannis both saw double-digit growth. In EMEA, Nike increased market share in performance and lifestyle, digital traffic was up double digits, and brick-and-mortar traffic in key countries was strong. In Greater China, Q4 revenue grew 25%, Nike Direct grew 19%, and EBIT grew 70%. This quarter saw strong sell-through in running, basketball, and Air Max, as well as record-breaking 618 results. In APLA, Q4 revenue grew 6%, Nike Direct was up 9%, and Nike Digital grew 9%. Nike is confident in its ability to drive sustainable long-term growth and has several opportunities to do so, increasing investment in innovation, accelerating direct consumer relationships across digital platforms, growing international markets, and returning to above-average margin improvement. For fiscal 24, Nike is focused on driving healthy full-price growth while unlocking speed, agility, and efficiency in its operations model. Wedbush Securities analyst Tom Nikic inquired, what drove the decision to re-enter partnerships with certain retailers and what has changed in the mindset that led to this shift? John Donahoe replied, our marketplace strategy is driven by the consumer, who wants digital and physical access, a mono-brand and multi-brand experience, for us to know them, and a consistent and seamless experience. We provide unmatched digital apps and mobile apps in our fastest-growing channel, and augment it with own retail stores. Additionally, multi-brand wholesale partners such as Dick's, JD, Foot Locker, and Sports Direct are an important part of our strategy, as well as neighborhood doors and accounts that serve distinct segments or price points. This quarter we have simply extended our marketplace strategy to enable access to more consumers and drive growth. JP Morgan Chase & Company analyst Matt Boss inquired, John, could you explain how Nike is positioned to capture global market share? Matt, what are the factors that will influence revenue for this year? John Donahoe replied, thanks, Matt. Structural tailwinds around expanding definitions of sport and health and wellness, coupled with the athleisure movement, provide a great opportunity for us to leverage our competitive advantages and gain market share. Our mobile apps have over 500 million visitors in Q4 alone, which puts us in an advantageous position of being in consumers' pockets and on their home screens. In addition, Nike Well Collective, spearheaded by Amy Montaigne, is a branding and retail strategy focused on the intersection of sport, wellness, community, and style specifically targeted to female consumers. Our highly successful Nike Live stores are rebranding as such. This aggressive approach allows us to be where consumers are when, where, and how they want us. Matt Friend replied, we're pleased to report 16% currency-neutral growth in revenue for FY23, with even higher rates of growth in North America and EMEA. We also saw strong double-digit retail sales growth throughout the year, including 18% growth in Nike Direct in the fourth quarter. Looking ahead to FY24, we are moderating our wholesale buys and expecting to see a similar level of retail sales growth in both the first and second half of the year. This mid-single-digit guidance includes 4 points of non-comp headwinds from shipment timing in FY23 and liquidation activities. Despite the environment, we feel that mid-single-digit growth is a great outcome. Stifel Financial Corporation analyst Jim Duffy, Wired, can you elaborate on your expectations for the promotional backdrop in fiscal 24 and how it relates to mid-single-digit growth, especially for the DTC business? Matt Friend replied, I'd say that the marketplace remains highly promotional, with our inventory levels ahead of plan and our competition. Total inventory was down versus the prior year and Nike's strategic partners have done a great job balancing investments in consumer connections, retail environment and inventory. We recognize that the environment will continue to be promotional next year and will put pressure on our wholesale partners. Our focus is on recovering full-price growth and profitability in FY24, and our mid-single-digit guide reflects 4 points of non-comp impacts, partly due to shipment timing and liquidation. We believe our plan sets us up for long-term growth and profitability. Goldman Sachs analyst Brooke Roach inquired, can you provide an estimate of how much of the transitory costs will be recovered in FY24, and what to expect in FY25 and beyond? Matt Friend replied, we feel confident that we are well positioned to drive healthy growth in 24 and beyond. Our gross margin guide includes a 50 basis point negative FX headwind, but when we back out the FX, we expect operational gross margin expansion of approximately 200 basis points. This majority of this increase is due to recapture of transitory headwinds such as freight and liquidation costs. We've negotiated pre-pandemic ocean freight rates, which will begin to tailwind in Q2 and accelerate in Q3 and Q4. With regards to liquidation costs, we anticipate a modest recovery due to our continued focus on promotional marketplace. We are also forecasting full price realization to be at or around 65%. Although there is still potential for more opportunity than even the metric that we provided. In the long term, these structural drivers give us confidence in achieving our desired margins. Telsey Advisory Group analyst Christina Fernandez inquired, could you please discuss the recovery in China through the quarter, and how does the marketplace look now compared to pre-pandemic? How have athletes and influencers been used to drive sales? John Donahoe replied, my visit to China in the last 90 days was a great reminder of our strong team there and how well they have performed despite numerous challenges. Our Q4 growth was 25% across different categories: performance and lifestyle, men's, women's, and kids. Nike's formula of the best innovation combined with local storytelling in the marketplace has resonated with Gen Z consumers. We saw the live streaming studio and social shopping is taking off. 6,000 mono-brand stores have dedicated the first floor to women's products, with Motiva being one of them. We are optimistic about Nike and Jordan's brands in China as there are structural tailwinds such as an active Gen Z, growing middle class, and increased focus on health and wellness. Matt Friend replied, we achieved excellent inventory management and full price selling performance in our last quarter. Our mono-brand stores have a complete seasonal selection that leads with innovation. China has the highest level of innovation penetration in any geography we operate in, which resonates with customers. We saw our highest level of full price selling in 8 quarters due to improved inventory position. Cohen & Company analyst John Kernan inquired, Matt, what are the company's long-term margin targets, particularly in light of any changes since fiscal 22, and how do DTC sales factor into the margin profile? Matt Friend replied, we've made significant progress towards our long-term goals with our consumer direct acceleration strategy, increasing our digital mix to 26% and our total direct mix to 44% by the end of fiscal year 23. We are confident that we are on a path to achieve our goal of high 40s gross margin in the long term, despite some foreign exchange headwinds. We will continue to execute on what is in our control to move us in that direction. John Donahoe replied, John, Matt is right. Our key to success lies in having the best innovation in our industry. We are focusing on product design, creation, storytelling and brand building to increase consumer engagement, which will drive top-line and bottom-line growth. We are confident that the recent off-site meeting with Heidi's team will boost the pace of innovation and therefore our success.